But we do want to start where I said, selling Salesforce, because the stock is down a lot today. It's the worst day since July '04. Brenda, it's good to have you on the show today. Before we get to the committee member who's actually, as I said, pulling the plug here, what's your reaction to this terrible day for the stock following the first revenue miss since February all the way back to 2006?
I think it's a little bit of an overreaction on the downside, honestly, in terms of the stock reaction, but it's also a good example of just how high expectations have become for some of the names within large cap tech. But I do think when you think about Salesforce, the profit margin improvement was phenomenal during the quarter, year over year. And that's what everybody had been focused on. Of course, the top line matters a lot too, but I think we're in this weird moment in time when a lot of companies are taking a pause and trying to digest. There's a lot going on. There's a lot of questions about how to best implement and utilize AI. And so I think that's causing a lot of companies to delay decision making. But I think when it comes to Salesforce and AI, the goal of AI for many companies is to better utilize their data. And a lot of companies' proprietary data that they use all the time is stored within Salesforce. And it has to do with their sales pipeline and their customers. So I do think that Salesforce is going to remain a viable company throughout all of this and be of great value to many companies. So for that reason, we are sticking with our position here, even though the stock is down. We've owned it for a long time. We've owned it since 2016, but we're sticking with it.
That's a long time. Would you consider adding more, down 21%?
At this point, I think there is uncertainty, no doubt, in the marketplace. So we're not adding more at this point in time. But if it were to go down further, which I hope it doesn't, but it might over the next couple days. But if it were to go down further, it might represent more of a buying opportunity.
You don't own this, Josh, but you certainly watch it. I know your company uses it. You've said it a number of times, I think, but still. What do we do with this?
Well, correct me if I'm wrong. Despite the fact that they missed and the guidance wasn't great, it was still an 11% growth year over year. Yeah, so this is a gigantic company, still finding ways to grow. But I think Brenda absolutely nails it. We're in a weird time where the expectations have been ratcheted up, and not every company on a 90-day basis is going to hit those expectations. I'm looking at the software sector in general, Scott, because when you have a bellwether name in the group down 21%, my guess is there are going to be opportunities created, maybe not day one, to Brenda's point. It could get worse, of course. But think about what's happening across the entire spectrum. Number one, the cyber names are getting hit hard on the back of this. When you hear Benioff talk about sales cycles being elongated, the fear is that this extends not just to the four walls within Salesforce, but to every software conversation at the enterprise level. That's probably true. I don't think it's as true for the cyber names. So CrowdStrike down 6% today. Palo Alto down another 3%. Okta down 6%. There's probably opportunity. Then you look at some of the bigger SaaS names in general. These stocks have been absolutely hammered. Intuit is off 18%. ServiceNow off 19%. Workday down 33%. Adobe down 34%. These companies, they're not all perfect comps, but what they all have in common is they are in massive bear market drawdowns from their own highs. I don't think most people even understand how much damage is happening. The median RSI in the 25 software companies in the S&P 500 is 37, and CRM is the most washed out at 16. So I'm more likely to be looking for an opportunity to buy than sell, given the price action that we've already seen here.
I mean, there were a lot of stocks within the software space that got this AI halo, and now it's time to pay the piper. If you look at, Josh named some stocks in the space that are down a bunch. I mean, year to date, Zscaler's down 28%, Snowflake's down 27%, Shopify's down 25%, Workday's down 25%, Twilio 24%, Adobe 24%, Cloudflare 15%, ServiceNow 6.5%. But they look a lot different than the chip names, don't they? And they look a lot different than the mega cap names, don't they? It leads me to Bill Baruch. He's our committee member who's selling Salesforce today. Joins us now to tell us exactly why you've lost confidence and now you're bailing. Tell us more.
Well, first and foremost, I'm looking at this from a portfolio management standpoint. It's in our bottom 5. Say we own it about a 1% allocation to it. And yeah, I mean, since we bought it, it's about a 30 basis point hit. But I look at this as potentially being dead money over the next couple of weeks, couple of months. When a stock gets slammed this heavily, it's just going to chop around. I think there's a better place to put that capital, and I can allocate it somewhere else. Now, I think there's some AI indirection. We're seeing that being highlighted here today. It's not just in Salesforce, and it's across some of the software industry in general. I mean, look at the revenue miss. Josh highlighted the 11% year-over-year growth, but what's the trajectory here? And they're blaming macroeconomic issues. There are, I think, some leadership. There needs to be some shakeups there. So I've lost confidence in this company right now. And again, I think from a portfolio standpoint, being in my bottom 5, I'd rather cut it loose, move on from it, and allocate the capital somewhere else.
Yeah. All right. Good. So I'm going to let you go because I want to continue to talk about this. So dead money, according to Bill Baruch, fails on Salesforce. Thank you. We'll see you soon. The fact of the matter is, Steph, is what I was sort of alluding to about these questionable, the Wall Street Journal has a story today, the record stock market is riding on questionable AI assumptions, right? Questionable AI assumptions, words that can be used probably to describe a number of names within this market that from, over the last 18 months or so, just given what's happened to a lot of stocks with the AI halo, have gone up a lot more than they probably deserve to. Now it's time to, see who comes home to roost. Do we need to look at more of these situations? You look at these software names that I mentioned, they're probably not alone.
Semiconductor companies are delivering on AI and the expectations of AI. The software companies are clearly not. You listed a whole bunch of them. It goes back to where are the funds going from CTOs? If you talk to them, they'll tell you they have to go and spend money on AI, and they have to go and spend money on cybersecurity. Cybersecurity is going to increase. The attacks are going to increase 45% year over year this year with a $2 trillion total addressable market. So where you want to be on the whole AI spectrum is in the semiconductors as well as this other component.
I got you, but if our viewers are in some of these names, right, like you're in Snowflake, Brenda's in Adobe, if our viewers are in some of these names, and they thought they were in the right place because there was an AI everything world.
But it's not an AI everything world.
Well, it sure felt like it.
Well, the semiconductors are delivering in spades, and the software companies are not.
If the software companies aren't making money from this, though, doesn't that put future semiconductor sales at risk?
No, I mean, I think that, semiconductor companies and the end markets that they serve, they're very diversified. And you are seeing data center everywhere. We were talking about this before the show. Data center is real, and that is going to have impact to industrials, to material companies, to discretionary companies, not just the software companies yet.
Are you saying you can't? Are you saying you shouldn't own these software names? Is that what you're saying?
Well,
are you rethinking your Snowflake position?
I don't own many. I own one. And by the way, the one that I owned beat and raised guidance. And it is already down 25%. And I felt really good about the product revenue growth. I feel really good about operating margins, free cash flow margins. So absolutely, I'm sticking with Snowflake. Would I own any of these others? No, I wouldn't. I want to be diversified. I don't have a lot of comfort in the valuations. I don't really even have a lot of comfort in Snowflake's valuation per se, but I am kind of interested with the new CEO as well.